The U.S. rental market is showing signs of improvement, with the absorption rate for newly completed apartments rising in the first quarter of 2025. Data from Redfin reveals that 48% of newly built apartments were rented within 3 months of completion, a slight increase from previous quarters. This uptick follows a period of decline in rental absorption rates from 2021 to 2023. The improvement is partially due to a slowdown in new apartment construction, leading to fewer available units for prospective renters. In Q1 2025, only 97,000 new apartments were completed, the lowest since Q4 2023, which is helping landlords fill vacancies more easily and push up rent prices. Rents across the U.S. have begun to rise again, with a 2.6% year-over-year increase in August 2025, reaching a median asking rent of $1,190. This marks the largest rent increase since December 2022, driven by strong demand and limited supply. The slowdown in apartment construction, coupled with high financing costs and rising construction expenses, has given landlords more leverage to raise rents. Younger renters, especially those in Gen Z and millennials, are facing financial strain as housing costs rise. A survey by Ipsos in May 2025 found that 70% of these renters are struggling to afford their housing, with many making sacrifices such as cutting back on dining out or vacations. As home ownership becomes increasingly out of reach due to rising home prices and interest rates, many young renters are turning to the rental market, adding pressure to an already tight housing supply. The construction of new multifamily units is slowing, with permits for such units down 23.1% since the pandemic's construction boom. This decline in new construction is expected to continue, further tightening the rental market. Rent concessions, once used to attract tenants, are also disappearing as rent prices rise and demand strengthens. As a result, renters may need to adjust their expectations or make compromises to secure housing, while landlords could capitalize on the growing demand by raising rents. The rental market's dynamics are shifting, and the growing financial strain on young renters may lead to changes in housing preferences. For landlords, the tightening supply of rental units presents an opportunity to increase rents, but the future of the rental market will depend on how these trends evolve in the coming months. For direct financing consultations or mortgage options, visit Nadlan Capital Group.